Welcome back to Stocklabs Market Recaps. We are into the month of March now. So this week ended March 4th, and the stock market has really not improved much. We have the same action we've been having for weeks now, basically all year. A lot of failed rallies, a lot of volatility intraday and intra-week. So most of the rallies fail. We closed the indices soft on Friday. For our weekly performance, we've got all three major indices down, IWM down. So S&P was down 1.2%. Q's down 2.4%, IWM down 1.9%, and the Dow down 1%, 1.2%. Oil had a big week, still trading on a lot of the Russian headlines and sort of the instability with the situation just in all of Europe. And then gold also had a good week. It's sort of continuing its breakout, in the same, with the same themes in mind. Bonds have actually been pretty strong just most recently, good week up to 2%, over 2% for TLT. And so pretty risk off week, just end to end. As far as our mega cap techs, we sort of said that we had to keep an eye on these because they've been trading really poorly. I mean, Tesla had an up week randomly, but it's still sort of down in these lower levels. Netflix, worst performer, down 7%. This has given back all of the. It got a bump a few weeks ago when Bill Ackman announced that he was, sort of taking a big position. But, I think it jumped up to around 450 or something, but all the way back down to where that announcement was sort of made. And then the rest sort of in line with the market. I mean, Apple was, I guess, an outperformer, down only 0.9. But Microsoft basically in line with the NASDAQ, Google in line with S&P, things like that. Facebook down 5%. This stock keeps getting whacked. Hasn't been able to get any traction really off these recent lows. Doesn't look like anyone's interested in owning this for the time being. As for our sectors, for the week, utilities up, and obviously materials up with the commodities move, because it's not just oil running, but a lot of the ags and all of that stuff are going to, because they're all related with a lot of the exports that come from Russia, Ukraine, and sort of what that means for prices if those regions, are in some sort of turmoil. Median tech stock down almost 5% for the week, really bad. So even the Qs being down 2.4%, it really doesn't even show you how much damage is getting done, on all of the non-TerraCap tech stocks, because they've been trading terribly for several months now. Healthcare, obviously, same thing, down 5%. I mean, the bear market in these healthcare and biotech stocks was really the first to start last year. Probably this time last year is when these stocks kind of topped out and have just been downtrending ever since. Financials flattish, industrials flattish, services, consumer soft. So just general poor breadth, risk off action. As far as the top performers, there were some, and they're all, like I said, they're all sort of centered around these commodity trades and risk off trades that are popular now just because of the ongoing situation. So gold up 7%, silver up 10%, oil and gas 15%. Grocery stores is more of like a defensive thing. You sort of see these stocks start to run when the market is thinking about trying to price in an actual recession. So um, keep an eye on some of these trends that are developing. And outside of that, I'm just seeing if there's any other things that stick out. Technical services, not sure, and yeah, everything else. So the only sectors that were up 5% were basically those. If it's not part of the Russia Ukraine theme and benefiting from that, then it's not going to have any sort of outside outsized upside performance right now. Everything else is 3% ish, whatever. And as for downside, okay, airlines got housed. Okay, drugs is part of healthcare, so we know that's weak. Gene editing, same thing. Biotech weak. Semiconductors down. This is a pretty big move for semis. EVs getting hit, even though Tesla had an up week. So not sure what's going on there. Another semis. Okay, cannabis trade fell apart a long time ago. More semis. So a lot of sectors down over 5%. So it's 25 on the first page. So we've got 30. We got 44 sectors down 5%. Across sort of a wide range of things, and we had a handful of sectors up over 5%, but they're all part of that one trade. So, yeah, the Russia Ukraine stuff is driving a lot of the action. Although a lot of these sectors really were downtrending, or a lot of these industries were really downtrending before the situation escalated that much. So, you're looking at this is definitely bear market action. Whether that's because we are pricing in a recession remains to be seen. Oil is going to pressure, oil up this high for a significant period of time is going to pressure consumers. So I think the higher oil goes or the longer it stays at these levels up here, you do have to be on the lookout for an actual recession because the consumer just can't, they're not going to be able to handle $4, $5, $6 gas. It's just, everyone's going back to work. All the demand is going to go up for fuel and all that stuff. So, it's a tough situation. For our just to look at breadth from just a purely market cap standpoint. So down 2.4% on 1 to 5 billion, 5 to 10 billion, down 3.25%. Large caps down 2%. And mega caps down 1.2%. A little bit better, but and Terra caps down 1.7%. So that's actually Terra caps as a whole. This 1.7, I think, is a little stronger than what our leadership watch list looked like. I think that was around 2.4%, if I remember. I just want to double check. Oh, down 3%. Okay, so Terra caps overall from just a market cap standpoint, we're a little better than really the leadership's the quote unquote leadership stuff, but still poor week overall. Everything every sector of the market down anywhere from this 1. 1.2 on the mega caps, and 3 point, it was 3 something percent for the 5 to 10 billion. So just general weakness up and down the spectrum of market caps and also sectors. So I mean, really no strength or accumulation in any other sectors other than those ones that were running due to the sort of risk off slash war trade. As far as this week for intelligence, same thing as last week. So remember last week we had, this screen was blank. So nothing was rated bullish as far as sector ETFs go. And we've got sort of the same scenario this week where, there's nothing in here that's rated as being up for the coming 5 days. We can invert. I'll just invert this just to see. Okay, downside. Okay, VIX is supposed to be down this week, so maybe that gives you a little bit of a reprieve on just nonstop downside, and maybe you get like a little more. You get some more back and forth action, same as this past week, but then except maybe this week instead of closing near the lows for the week, we will maybe be able to maintain sort of the current levels. This mid cap, this is short mid caps is supposed to be down, so maybe that's a little bit bullish for the general market, even if indices aren't going anywhere. Inverse big oil is rated bearish, so oil trade's going to continue higher, presumably. And then short Brazil is supposed to be down. So, I mean, if anyone's trading Brazil, I think actually Brazil's had a pretty good year so far. You see some of these Brazilian ETFs moving higher. The PBR, the national oil company's been trending a little better than it has in a while. So we'll see if that sustains. But overall, I mean, between the bullish intelligence and the bearish intelligence, I mean, there's not anything that you should really be that excited about on more of like a swing time frame. I mean, maybe for trading, it's been great because these big ranges let you sort of get in and out with sizable moves happening in a short time frame. But swing time frames, you're probably better off just waiting around a little bit or continuing to wait around some. I'll just show this. This is our so OBOS, overbought, oversold. Pretty close to getting oversold here. Maybe if we get an early move down Monday, Tuesday, we could get this sort of triggered and get something of a rally that's more durable than what we've seen. I mean, so far, any rally that goes past maybe 2 days has just fallen apart. I mean, it's hard to get even 3 up days in a row, out of this market so far this year. Last oversold signals we had were this is around option expiration in January. If I crank this up a little bit, yeah, same thing. Okay, so this so we're 2.26, 2.21 is oversold for 12 months, and 2.22 is 6 months. Now, don't really be fooled by this, 4/100ths of a point to get to these oversold levels. But I mean, that could be 300-400 points on the NASDAQ. I mean, it's not like 5 points down is going to trigger this. So Um, and it's not just index moves. I mean, a lot of the commodity moves play into it, forex moves play into it. So we'll see how this. We'll see what the algorithm thinks once the market opens back up on Monday. And trying to think what else. March seasonality is okay, somewhat bullish. I mean, the April seasonality, this is supposed to be the best month of the year. Sort of coincides with with tax season, the end of tax season. Once everyone files and everything, I guess people. I mean, I don't know. Maybe there's nothing to conclude on it being the tax month, but we're in March right now, so um, should be a little bit of a bullish slant. But for the bullish side, market has a lot to prove, so better off waiting for these oversold signals to hit, just so you could be a little more confident that you know the market's washed out enough. Um, yeah, so that's it for now. Another crazy week. Fly had a good week. I think he was up. He was up 11% or something like that. Which, I mean, that's great for this market. So, um, be back at it on Monday. Recap again next week. And good luck, everyone. Talk to you later.